Hello, friends. Welcome back to Pocket Power. What if I told you that 50 Indian listed companies could be your ticket to serious wealth? Stick around because by the end of this video, you'll understand one of India's most powerful investment tools. What exactly is Nifty 50? Think of it as India's dream team, the top 50 companies listed on the National Stock Exchange. Yes, we are talking about giants like Reliance Industries, HDFC Bank, Infosys, and the likes of Hindustan Unilever. And mind you, these 50 companies together control the entire NSE market. So when you invest in Nifty 50, you are not just buying stocks, but you are buying a slice of India's economic engine. Why should you invest? First is easy diversification. Second is an impressive return. Yes, I'm talking about 12% CAGR over the last 20 years. The third, that it's ridiculously simple. Just invest in a low cost index fund or an ETF that tracks the Nifty 50. And fourth, you are riding on India's growth story. We are becoming one of the world's fastest growing economies, and you'll get to be a part of it. What are the advantages of investing in Nifty 50? Well, the management costs are crazily low, right? Because index funds are tracking the Nifty 50, they charge between 0.1 to 0.5%, which is significantly lower than actively managed funds. Second, you have a built-in diversification spread across 50 top companies. And the third, it's the easiest and beginner friendly. You don't need any stock market research to be done, no market timing, etc. Just plain pure investing. Any disadvantages you should be aware of? Yes. Nifty 50 will be able to give you a return only which the index is giving, right? There might be some funds which give higher than the index performance. That's a downside. Second, you have no selection over the stock. So you can't say that out of this 50, I need to choose only those 20. You'll have to go with the entire bucket. And the third, if you're a short-term investor, market fluctuations can lead to, kind of a challenge for you. So, yes, despite these challenges, the disadvantages are often outweighed by the simplicity, low costs, and the long term performance advantage for most retail investors. I've seen that most people aren't diversified enough and get crushed when their stock picks fail. Yes, you heard it right. So, unless you're ready to treat investing like a full time job, Nifty 50 is your only answer. One important point you should also note is that there is a next Nifty 50 also. This is nothing but the next batch of rising stars. Over the last 5 years, Nifty 50 delivered about 16.5% CAGR. Nifty 50, it delivered around 19 to 20%. So who should invest in these indexes? Nifty 50 is perfect for a conservative long-term investor who wants market-linked returns, but without the drama, minimum volatility and reliable performance. Nifty Next 50 is for moderately aggressive investors willing to handle higher swings for potentially higher gains. So please know yourself, your risk-taking capacity, and pick accordingly. So here's the truth nobody wants to hear. It's not about timing the market, it's about the time you stay invested in the market. Yes, Nifty 50 is your solid, stable choice. Blue chip companies with proven track record, rock solid foundation. Nifty Next 50 is your growth engine, higher risk, higher reward. They both let you ride on India's incredible economic expansion. The key, however, is discipline. Yes, regular investing, staying committed through ups and downs. That's how wealth is built. If this video just helped you change the way you think about investing, smash the like and subscribe button. Thank you and have a good day.